And before we move on to the market, maybe I should just take you up on some news from the presidency over the weekend, more or less saying that no need to panic. Nigeria will remain a united country, given the crisis we saw last year with respect to security across the country. Your thoughts on that comment coming at this point, and how assured are you that 2013 will be a better year?
I think the comment was expected. I think there have been a lot of uneasiness, especially with the security situation, some of the political fighting that's happened. But I think what happens in a democracy. I think the president is coming out stating that, look, we're in a democratic process. It's a competition of the different interest groups. Right. As long as they try and balance as many interest groups as possible, you're going to have these, especially where a growing democracy, you're going to have these issues. But the unity of Nigeria is paramount and cannot. Do
you think this year will be a better year, though, security-wise? Of course, we saw quite a few attacks. We've seen a few over the Christmas holidays as well. Yeah, Your thoughts?
But if you look at the security situation since the beginning of last year, the big spectacular attacks have dropped. Right. There have been a lot of smaller attacks.
Which I guess that's significant.
Yeah, which shows that issues are moving from hard targets to soft targets. The security agencies are having an effect. Hopefully that will continue to this year and we'll see better. But there needs to also be a political situation. It can't just be a security situation.
Right, your thoughts on the market and what all this means for the market. This year, I think the key thing many people are pointing to is that we have an MPC next week, so maybe we'll begin to see some softening on the monetary policy stance. But I think there's a broad view that we're going to see that this year. And what that means is that interest rates are likely to come down. Your thoughts on how that is likely to support the equity space?
Yeah, the MPC has a tension between their mandate of controlling inflation and trying to generate growth in the economy, which is what the government wants. Right. And I think they've had a very tight monetary stance to try and control inflation. I think if you see inflation trending downwards, because it's trending upwards last quarter, I think MPC will be under enormous pressure to start tapering down interest rates and bring interest rates down and stimulating growth. And that will have a big effect in terms of, especially the manufacturing sector, in terms of getting investment into that sector. Local companies are able to invest, because right now with the interest rates as they are, commercial interest rates, it doesn't make sense. It's too expensive to actually borrow to invest. So either they use their own internal cash flows or they go to the capital markets. And the capital markets hasn't really been that good since the fall down in 2008.
Let me get your thoughts on the capital market. Do you think, for instance, we're likely to see an IPO this year? 35%, pretty strong performance. Many people say that the market tends to feed on its past performance, so this year is likely to be good. So do you think that this is the year we'll begin to see the return, if you like, of the IPO market?
I think it depends on the amount of factors. I mean, 35% was good last year, but it's coming from a very low base. It was good growth. If it's sustainable, it'll be good. But I think Orlando rights issue, which is on at the moment, will show how strong the market is, because that's quite a big rights issue. Right. If that goes on successfully, I think it will encourage others to come into the market. Obviously, everyone looking at bond yields and seeing where bond yields are, and the government's announcements of various tax reductions for capital market operations will also help, because it will reduce the cost of issuing, because Nigeria still has one of the highest costs of issuing in Africa.
Your thoughts on the banks? I mean, the banks are leading the way this year. The market is up 4%, and slightly because of the banking sector, that is up almost 10% year to date. So your thoughts on how well it could do this year? Many people suggest that even though it did lead the market last year, it's likely to lead the market again this year.
The way the Nigerian market is structured, unfortunately, fortunately or unfortunately, the financial sector is always going to be a big part of the market, and every day it's the biggest part. Everyone's looking at the banking sector, expect reasonably strong Q4 figures. And going forward, look, last year was a year of stabilization. This year should be a year of growth when the banks are now take off in that sense. And when you look at the likes of Union Bank, you see where the share price is. Share price moves from 2 naira in 2008 to now almost 7 naira. And you see things like that. There's growing confidence in the market. Now it's up to the banks through their results, through their products, to sustain that confidence throughout the year. I think if we have any weak results, especially from any of the big banks, that might taper that confidence.
How big a risk do you think that is for this year? Many people say the worst is over. We've cleaned up the banks. AMCON has done its job. So is there a risk there?
There's definitely a risk, because the banks have to grow the balance sheet. Right. And is this aggressive growth of credit that caused some of the issues we had last time? So it has to be managed in a better way this way. And now people not necessarily forgetting the fact that the banks have to pay AMCON. Right. There's still the bank cost of AMCON, which the AMCON leaders said the banks have agreed to increase, which is a percentage, as a basis points on their total assets. Assets. Right. So as they grow their total assets, they're paying AMCON more. And so that cost, people have to factor into the share price, because that's going to affect profits.
Well, many people say that it's not very significant, but I guess divergent views on that point. But moving on to another sector, cement. It's been in the news recently. There's talk about an oversupply. This is a sector, of course, a lot of investors are looking at outside the banking space. Your thoughts on that news and what it means for that sector?
I think the two things in regards to that. I think firstly, it goes to the heart of Nigeria's industrialization policy. Yeah. Nigeria made a focus on, one of the focuses was cement, backward integration. Let's produce enough cement in Nigeria. And to encourage that, let's have temporary tariffs on the importation of cement so that the growing industry can be protected. Now you have a situation where some of the guys who have invested in that industry based on that are saying, well, cheap cement is being imported and it's undermining their market. So Nigeria has to decide what they want to do, because for industry to grow, it needs to be protected for a while it's growing. I think secondly, it goes to the fact that 50% of cement cost is really energy. Now, a lot of cement factories, if we can bring down the cost of energy, the power reforms can go through and can get energy to the cement factories, then their cost production will reduce and they'll be more competitive. And so I think those are two aspects that need to be addressed.
Very strong point. But outside cement, outside banks, what else excites you? Many people say that the valuations in the consumer space are quite rich. You have the likes of Nestle, well over 700. Guinness Nigeria has rallied recently, touching about 300 now. Your thoughts on the non-bank and, of course, non-cement companies out there? Is there still any value left in your view?
I think the FMCG, as you said, especially the big names, the valuation is quite high. But we're seeing a lot of M&A activity, especially in some of the unlisted FMCGs. A lot of international companies are trying to get a foothold. And some of the valuations of unlisted entities that try to make bids for in the market are quite high because they just want to get a foothold in the Nigerian market. Right. So I think that's translating to some of what you're seeing in the consumer market. I think that's going to continue. I think M&A activity in the consumer market is going to be very interesting this year.
But you just talked about the fact that a lot of investors are interested in Nigeria's consumer space. Yeah. Do you think that because of that attractiveness of Nigeria's market with respect to the consumers, 167 million people, do you think that justifies a premium for the consumer companies? Because many people suggest that they're really, really, really overpriced at this stage.
I think what happens that they want to be in Nigeria. They believe that for them to grow, especially if they have an Africa strategy, they have to have a Nigeria strategy. To get a foothold in Nigeria, they have to pay a premium. And they're willing to pay that premium now because they believe over time that will pay. And they're looking at people who have done that and seen the success they've had. So for them, paying a premium now makes sense from that point of view. And if you look at the big people who are looking like Tiger Brands coming to Dangote Flour, then paying a premium in Nigeria compared to their total revenue is quite small. So it's a decision they can make quite easily.
I want to come back to the banks and let's talk big banks, small banks, tier 1, tier 2. The tier 2 seems to be leading the way this year. In terms of course, you have to strip out UBA because UBA is an outlier. In fact, maybe we should touch on UBA briefly because in a way, UBA has given us 2 new companies. So in the first few weeks of the year, we've already seen 2 new listed companies. Let's talk a bit about those companies. Your thoughts on the registrar business that has now been listed, and of course UBA Capital that comprises the asset management, trusteeship, and other investment banking related businesses. Your thoughts on those new listings?
I think it's part of the restructuring that UBA is saying. It'll be interesting to see because in general, a registrar business is a technology business. Yeah, it's not that complicated. It'll be interesting to see what there be any interest in registrars companies on the whole going forward, because they move from more manual to more technical technology, using technology. Right. You're going to see that it's really going to become a margin business in that sense, where high volume makes sense. In terms of UBA Capital has a good platform based on UBA spread across Africa. Now, can they leverage off that platform to ensure they're doing deals not just in Nigeria but across? And that's where they're going to get value. I think on the whole, I think this is an important year for UBA in a sense. They've been able to stabilize last year. Now, can they show that growth, especially outside Nigeria, and come back and cement their place as one of the top 4 or 5 banks in Nigeria?
All right, let's bring this together. Let's round this up with the news around the SEC. And it seems the National Assembly are still out for the Director General of the SEC, Aroma Ote. Your thoughts on how significant this is for the capital market, because many people suggest that if this issue drags on, it could shake investors' confidence. Your thoughts?
The issue has to be sorted out. It has to be sorted out, I think, before the end of this month. And we want to start the year where everyone knows where everyone is. I think the situation as it is now is that the National Assembly have backed themselves into a corner, and they made quite a strong statement. Now it's up to the President to try and find a middle ground. I don't know whether it involves Mr. Tay making a public apology to the National Assembly, or the government deciding that, look, the market needs to move forward and we need to work with the National Assembly, so we need to do something. Right. But something needs to be done, and someone has to make a decision for the betterment of the market.